Hi, this is Alan Gassman, and I'm here with my esteemed colleagues, Peter Farrell, who is a tax lawyer with our law firm, Shane Lisinski, the director of What's Going On at Estate View, and there's a lot of those things, and Mason Hockensmith, one of our lead programmers. And this is a monumental event for me because number one, no puppet, but number two, we have the AI working quite beautifully with our calculators. And Peter's been using them for a couple of weeks now. And our primary programmer, Kevin Gray, has just done a fantastic job putting these together. We're breaking the sound barrier here. So let's go ahead and talk about a couple things. This presentation does not qualify for continuing education credit, mainly because it's not good enough. But if you are a CPA or you're in a jurisdiction where you just need proof of attendance, just let us know and we'll send that to you. Also, thank you very much for your support of Estate View. It's the most expensive hobby I've ever had. And you can enter the code 3-25-2026 for a 30-day free use. And then on Fridays at noon Eastern Standard Time, you can get on a Zoom call with Peter, and he'll help you out. If you have any problem at all, you've got my email address there. Just give us any day and time, and we'll do a quick Zoom call and get you onto the software. If you do want to sign up on your own, that code 3-25-2026, go to estateview.link. It'll take you here, put in your email address, put in that 3-25-2026, and click on sign up, and you'll be in there. And then if you want to buy it, it's still only $4.99 a year. It's going to go up quite a bit sometime, probably July or August. It'll be multiple times that. Or you can join for $49.99 monthly to support my habit. If you're a volume user, we have volume discounts. So then if you go to estateview.com, you can go to our library, click on any of these buttons and see a video about the technique. That's becoming pretty popular. And now I have some other slides that I'm not going to have to use because we're going to go live here with the software. By the way, if you have any questions, just click on the question panel, fill out your question. There's no questions yet. We're going to go probably 55 minutes or so on the calculators. And then after the 55 minutes, I'll feel like I gave you an hour, a nice program. And then we're going to do, quite candidly, sort of a backstage tour. The four of us are going to go through a lot of the things that are going on with Estate View. Some of this will become videos that we use. Some of it will just be erased because it will be so mediocre. And we may go an hour or two. It may seem longer. So if you've been away from Estate View a while, you'll notice that we've got a new appearance. When you go to estateview.link, please keep in mind this is your computer or your iPad or your phone directly interacting with our platform on Amazon AWS with all the security that they offer. The data stays on your computer. If you are not using the AI, the programming projects into your computer and your computer does all the calculations, as we'll show you. If you're using the AI, then we're following the very strict AWS and AI protocols that it will not learn from your data. And we do not have access to, or quite candidly want access to your data. That data goes through AWS directly to ChatGPT or Claude or Gemini, and there's no human review in Claude. There may be some 8-day thing where they check and make sure that you're not a terrorist and you're not building atomic bombs. Otherwise, this is the same privacy that hospitals use, that doctors' offices use, that the US military uses. It's as good as we can get it. One thing about that is it's not saved to your computer. It's only on your browser. It's up to you to save it to your computer. And we're going to show you how to do that. So if somebody does figure out how to hack our AWS account for Estate View, there's nothing there. There's nothing there but our programming. Your data is not there, but you have to save your data to your computer, because if you put too much in your browser where this happens, it could be lost. So across the top, I have the instant plan, which we'll show after the hour. I've got single and married client comprehensive, which are pretty much tied with AI and instant plan as our most popular features. We've got updates of what we've changed recently, and then we have our AI modules down at the bottom. And if you go to the AI, you'll find on the bottom left a video that will show you how to use the AI. Then below that, we have planner resources, and then we have what started Estate View, and that is making calculations. So I'm going to start there. Peter, pick a calculator, any calculator or a potpourri for 300.
What about the GRAT calculator?
Okay. So GRAT stands for Grantor Retained Annuity Trust. And a Grantor Retained Annuity Trust provides you with the ability to put in a hopefully appreciating or high income asset into a trust. The trust pays the amount you put in back to the grantor and keeps anything over what is basically known as the 75/20 rate. So right now, the midterm applicable federal rate is in the high threes. You take 120% of that and you get 4.8%. So if I do a 10-year GRAT with level payments every year for 10 years, and I assume that the assets I put into the GRAT will grow at 7.5%, and I put $1 million into the GRAT, it's going to basically give me, the grantor, my $1 million back at 4.80% over 10 payments. And what's left in there at the end is never subject to estate tax, even though I've only made a tiny, tiny gift. So if you use Number Cruncher, Brentmark, Tiger Tables, those are the really tried and true, fantastic calculator tools. You'll input these numbers, maybe a couple of other numbers, and you'll click to see results. And that is our standard calculator. So I'm on standard mode there. I click to see results. And now on the left, you see my inputs. And on the right, you see a 10-year GRAT, level payments, $1 million in. The assets will grow at 7.5%, 75/20 rate 4.8%. It will pay me $128,250 a year for 10 years. And the gift will be $2 because it's almost zeroed out. And $246,000 will be out of my estate at the end of year 10 and never subject to federal estate tax. That's what most of the calculators do. Most of the calculators don't do much more than that, but we added a separate feature, and this is still no AI, just our calculators. And we can click on duplicate at the top left. And now you have GRAT number 1 that I just did, and GRAT number 2, which is identical. And you see two of them there, GRAT 1 and GRAT 2. But I can do something different on GRAT 2. On GRAT 2, I can say, let's say that the payments are not level. I know that the GRAT tax law allows me to have the payments start low and increase over the 10 years. and you can use the regulation formula that it will go up by 20% a year. So I click on increasing 20, and then you see here, I can click there and click there to show you that these are different. And what's the difference? Well, the first year payment is $52,883, and the remainder interest is $313,000. So another $67,000 escapes estate tax, and that's the standard mode. Now, what we did at Estate View in 2023 was we developed what we thought was a much better mousetrap. And I can click on Pro. And now when I go to Pro, you see more things. You have the same inputs that I just showed you across the top, but also more features. And I'm not going to go through all of them, but you can see pretty obviously that it's just giving you more information across the top. It's also telling me that there's a 73% chance that a grantor that age will live past the 10 years. And it's telling me the estate tax savings like it did before. If there's a state estate tax, it's going to calculate that as well. It's going to ask me what state I'm in. Maybe I'm in the state of, usually I'm in the state of confusion, but in the state of New York. Now it's going to tell me my New York estate tax situation. And it's going to tell me the total estate tax liability for the person. And it's going to run a spreadsheet. Everything is basically Excel based. This is on the, as I said, the Amazon platform, programmed in Microsoft C++, Blaze, and other things to give you a spreadsheet so you can prove up your numbers. So for GRAT number 1, I've got the equal annual payments, and for GRAT, they're right there. And then for GRAT number 2, you see the payments go up. And then for Professor Jerry Hesh, we also show you the estate tax savings, not only from getting these assets out of the estate, but the estate tax savings from the burn, from the fact that the grantor is going to pay income tax on the assets of this trust, even though they're not going to be subject to estate tax. And then also for Professor Hesh, we can click on Export to Excel, and then we have a nice Excel spreadsheet that we can show the client, and more clients like that. We've recently changed the spreadsheet so that page 1 gives you all the assumptions, and page 2 gives you the details. And then those of you who are just salivating because you can't wait to use this, a couple of other features. On the left, the new things added when you go from standard to pro are ribboned. So you'll see based on the ribbons what's added. And when you go to the bottom, it'll say, would you like to also contribute a discounted asset? Would you like to show the income stream from the asset as opposed to just the growth? And if I click Pro Plus, then I can do those things. So now I can show, for example, I can go and duplicate GRAT number 2, click duplicate. It's exactly the same as GRAT number 3, but now I might change something, such as what if I can take a 30% discount using an LLC? So while I've put $1 million of assets into an LLC, or maybe 1,100,000 assets in LLC, I can transfer a 99% interest to the GRAT, show that as a $700,000 asset, and look at what's in the end, in the GRAT at the end. Instead of $1.3 million, $3.5 million. That's pretty, I mean, that's the remainder interest. Gift is still nominal, but the value at the end, Peter, where's the value at the end? Got to be there somewhere.
Um,
So anyway, a lot more estate tax savings.
I
A
think
lot,
maybe in the bottom chart, if you scroll over to the right.
right? Okay. Well, we'll have to make sure it's there somewhere. There it is. Trust fund at the end.
Yeah.
3,000,005. Amazing. Okay. So that's the other thing is you can click on alter summary columns and you can decide what you want to show and what you don't want to show. So if this is going to overwhelm the client and overwhelm the planner, you may only want to show a few of these columns. You may want to have fewer columns, and then you'd have fewer columns. And then on the spreadsheet, you can pull the spreadsheet up, and then you could show just every other line or every third line, and uh, that's going to help you illustrate the results in a maybe a more client friendly manner. And also you can have fewer columns if you like. So you could take out a lot of these columns so that the spreadsheet has fewer columns. As I said, you can export the spreadsheet to Excel. You can also click on File, Save As, because remember I said this is only on my browser. So now I can say Jones Grat Saturday. Click on Save, and that's going to save that to my computer. And if you're not sure about how to do this on your computer, just give us a call. We'll do a quick Zoom. You can share screen and give us all your passwords, and then we'll help you with that. All right, so now I can generate explanation, and I can say I want PowerPoints for all three of these, and I want an explanation for all three of these. Click on Submit, and then it just created these PowerPoints. So, or it's creating the PowerPoints. And then I can forward the PowerPoint to the client. And the PowerPoint's pretty nice. You'll be able to see for yourself how they look. I'll pull one open just so you can see. And we're the only calculator in the world that has all these features. Some of the more advanced RIA calculators have these calculations in them, but they're not as transparent or as thorough. And this one, now you print the PowerPoint, it tells you all your inputs, it tells you your outcomes, and you can of course customize that PowerPoint. Okay. Now, the other thing you can do is share with client. Click on share with client. It gives you a code number. Click on URL. Click on copy to passport. So basically now I can copy and paste this to a client in an email. They'll be able to open up this exact calculator with all these settings after they watch my Zoom video about this, they'll be able to change the settings themselves. And people who have an MBA or an engineering degree or even a medical degree, they can figure this out if they want to spend the time. And by our experience, a lot of clients and other advisors would like to mesh out these numbers. Then click on humor, and there's a knock knock joke about grantor trusts. I mean, that's something the other calculators just don't have that. I mean, if that's not the reason to buy Estate View, there's no reason. Okay, so now, and by the way, bottom left-hand side is your explanation video. You can make it bigger, smaller, move it to the left, move it to the right, and play it while you do your thing. So Peter, I think I've covered a calculator. Do you want to go ahead now and share screen and show us what the AI does? Because everything I've shown so far is not AI. You don't need the AI to do these things. By the way, the AI button is on the bottom right. And when I click on the AI button, the AI opens, and I can make it bigger or make it smaller, move it around, and then make use of it. So Peter, are you able to take control, or what do I need to do? Do I
Um,
control?
but if you or Shane can just make me a presenter, I think you have to stop presenting.
Presenting is.
Okay. Yep.
Okay.
And you can see my screen?
Yep.
All right. So I'm going to go into that very same calculator that Alan was just using. I don't have the same inputs he had, but I happen to have 3 different GRAT calculations, as you can see. And now with our AI tool, you can have the AI guide you through the process of developing each of these scenarios. I was mentioning to Alan earlier, I think this is going to be a phenomenal tool in LLM programs for students learning to become estate planning attorneys. In the classroom, I know there's already some law school professors who use this, or even just professionals or financial advisors who aren't as familiar with some of these strategies. And I'm going to show you how to do that. You can start with the very most basic things, have it explain it to you, have it walk you through the inputs, recommend inputs to change, and even develop letters, correspondence to the client, to other advisors, and so on. So if you've used our other AI tools, one of the nice things about Estate View is that we allow you to use and switch between Google Gemini, Anthropic Claude, which we're very impressed with, and ChatGPT. And it's the same thing in the AI tools that are now integrated into our calculators. A couple other things to note is you can speak into it if you want to dictate a question or a comment. And just some comments about the back end, the calculator is able to see the underlying calculations that are running the particular tool you're using. As Alan mentioned, the AI isn't doing the calculation, but it is able to see how the software is calculating the outputs. It can see all of your inputs, and it can see the outputs that you can see on your screen. So Alan, at the beginning, gave a very good explanation of what a GRAT is. But if I was a law student just getting started out, I never heard of a GRAT, and I said, what is a GRAT? Explain it to me like I'm in the 3rd grade. And you can post that message, and it will come back and give you an explanation of what a GRAT is. And this is an example of a magic piggy bank.
That'll look good on a law exam.
Yeah, that's true. And so the next thing you can say is, so for GRAT 1, take a look at my inputs and let me know your recommendations. What should the term be? And it's going to take a look at the inputs. I'll note as well, you can copy the output that it gave you. You can also download it as a Word document, or you can print it. And of course, when you print it, you could choose to print to PDF. So it comes back and says, in this case, a 2-year term is the right call for an 85-year-old grantor. And here's why. He has an 82% survival probability, strong odds that the GRAT succeeds. And then it already does the comparison to you to the 2 other GRATs. One was a 5-year, one was a 10-year. It says a 5-year GRAT has 56%. It's a coin flip. If it's a 10-year GRAT, it almost certainly fails. Well, 20% chance of succeeding. And it gives some other recommendations. So it says you're only moving $1 million out of a $25 million estate. And so it says switch to increasing payments, something that Alan just, it's pointing out the things that Alan was pointing out earlier. Maybe we do increasing payments and extend to see an illustration beyond the term that we're showing. You can switch, as I mentioned before, between ChatGPT and Gemini. And Any additional questions you might think to ask this, Alan, on this one?
Yes. Can it write an explanation letter
Yes.
in the 3 grats?
So write me an explanation letter to a client describing the 3 grats and comparing them.
Oh, and can you add with a copy to the CPA describing all tax return filing requirements?
Okay. I'll do that as soon as it gives me the response.
Wow.
And you can see it even is kind of formatted it like a client letter, including tables. You know, to take this, I have done this in the past before we had an AI tool like this, and we have some nice outputs, as Alan mentioned before, but to create the tables and to copy and paste the inputs into them and make a comparison spreadsheet to the client takes quite some time, and you get this, at the very least, it's an excellent first draft. Then you can click download. It's saved that as a Word document to my downloads file. Now we'll ask, please draft a corresponding letter to the financial advisor and CPA.
Wow.
And it's sort of explaining the same thing, breaking it. This one's to the financial advisor, and can give maybe a little bit more sophistication and explanation. And things that for attorneys dealing with or working alongside financial advisors and CPAs, they have questions about the logistics of this, maybe sometimes more than a client does. And so one thing it pointed out, I'm going to go through the logistics of how this grad is going to be funded and what the ongoing requirements, both for the client and for his or her other advisors, will be. So for the CPA, tax reporting obligations and so on.
So Peter, now show us, will it do a grat number 4, 5, and 6, showing us other strategies that it may recommend?
All right. One thing is I can't type in while it's still thinking here, so I'm going to give it. I think it's almost done. All right.
I have a spouse like that.
So we're going to say, give me 2 other grat scenarios so that I can give the client a couple additional options. Another thing that I've done that it's done a great job at, as Alan mentioned, I do customer support for Estate View, and some of the questions I get are just, what does this input do? Maybe we didn't do the best job at giving an explanation. If you weren't aware of this, if you hover over the inputs, it does give you a little bit of explanation about it, but sometimes you probably could have done better at explaining it. Well, you can go through and ask the AI assistant, explain to me every single input and how it works in the calculation. It will do that. Now, you might not need that for everyone, but if there's one particular input where you're having trouble seeing exactly how it fits into the overall calculation, you can ask it what it does, and it gives great explanations. So gives another scenario, a 2-year, $5 million grat with increasing payments, a $5 million 3-year grat with increasing payments, and then we haven't demonstrated this before, but now it's saying here are your proposed changes for grat 3, 5 million, 2 years, increasing payment. So I could apply this to one of the grats I already have, which is grat 3, or I can duplicate grat 3, but apply the 3 new changes that the AI assistant has recommended, and it will create a 4th grat.
Wow.
With those recommended changes.
So it does the work for you. It creates the next grat.
Exactly.
And you don't have to worry about inaccuracies because everything is still on our spreadsheet. It can't hallucinate.
That's right.
It might hallucinate.
That's right.
Yeah. Wow.
And to kind of demonstrate what I said before about asking about an explanation for different inputs, I'm trying to see a good input that might customer might have a question about. But I mean, even something basic like what does the annual growth rate apply to? I think most people would realize that applies to both the assets and what's in the trust. But maybe you want to confirm that, it doesn't apply to the assets in the trust. So
now here's what's really neat. You could, when it's done with this, you can say, how would I take the same assets and do an installment sale with a 10% down to a grantor trust, and how would the result compare? And will it then tell you what the numbers would have been for an installment sale? You could say with 10% down.
How would this compare to GRAT illustrations?
And I guess eventually it'll be able to go to the installment sale calculator and do that. But right now,
that would be very cool.
Yeah.
One thing I'll note while this is generating an answer, we didn't show the instant plan in the beginning, but one way you can sort of do this now is if you go in the instant plan, open a client and choose calculator only inputs, you can fill in the basic information about a client, and then that gets added to your client library here. And when you click on that, I only have 2 clients on this computer, but you could select that client, click open, and it will input that client's information to the calculator. So you can basically pick up where you left off with respect to that client. All right, let's see what it said comparing the installment sale to the GRAT.
Unbelievable.
So using the same 5 million of assets, it talks about the seed capital gift, the value of the promissory note. It pulls in the AFR, tells you the amount of the exemption is used for that seed capital gift, and then gives you a side-by-side comparison of the two. And says why the installment sale might be better here. No mortality risk, lower hurdle rate, since the 75/20 rate's 120% of the AFR, payment flexibility, and then why the GRAT may be preferable, so on. And you could go and then say, all right, write a client letter that explains this, and also letters to the financial advisor and the CPA, and it could do the same thing.
Wow. And put a billing description in as to what I just did and how long it take.
Most importantly. Yeah.
So Peter, go ahead and take us now to the instant plan.
Okay.
Take us step by step through what you just discussed so we can show. So the instant plan is EstateView's method of inputting information about a client. And I've attached for everybody in your enclosures our fillable PDF. We have a calculator only fillable PDF that just asks for the information that we need to run our calculators. And then we have a standard and a detailed fillable PDF forms for both married and single. But Peter, how you want to just give a little 3-minute talk about how you would put the data into the portal or into the fillable PDF, save it to all the calculators, and what, if any, AI, at this point, I don't think there's any AI in the instant plan other than if you want to get a picture of their house. I think we get a picture of their house on their chart, but tell me how, let's just let everyone.
I think maybe in the results there might be an AI summary.
Okay.
See that when we get there.
The results, there's also the document scanner, and the picture of the house is not AI.
Oh, okay.
Okay.
Thanks.
All right. So one thing I'll mention.
Robot.
Oh, go ahead.
That Mason really is real. It's not. It's not. It even smiles.
Mason is not AI.
By the way, he also answers any questions about physics. I forgot about that. If anyone has any questions about physics, what laws were you talking about last year, Mason? I forgot, but we had a very extended discussion.
Man.
It'll come to you.
I don't recall.
So, okay, so just to repeat what they said, we do have some AI in our intake in that if your client sends you a bunch of stuff, a financial statement or an intake form they did for somebody else and their will and their trust, and you also have your background search that you did with our AI, it will, using Mason's system, it will fill out our fillable PDF to the best of its ability. And then you can clean that up so it saves some time. So that's one AI application. And then the second AI application, Peter, you're going to show us.
That's right.
Yeah.
And
Sorry.
that if you're a user of Instant Plan now, you access that by going to open a new client and clicking AI document scanner. If you're going to upload the fillable PDF that Alan mentioned, then you'd come here and you would upload the fillable PDF, and the software will extract the answers that were given in that PDF. One other thing to mention, we're talking about the client data library, and I realized this today again as well. For safety purposes, this is good, and Alan mentioned it, but you only have the clients that you have entered on this computer. So I'm at home this morning, and I'm on my laptop, and I don't have the other clients that I've entered on my work desktop. That's okay. All you have to do is select the client, click Download Client File, and keep a copy of that in the directory or however you manage your client files at your firm. And then when you need to open that up, again, you go to Client, New Client, Upload from File, and that's a .estate view instant plan file type that will download. You can drag and drop it here or choose it, and it will pull in all that client's information. So you just have to keep that in mind if you're using multiple computers.
Right. So if some North Korean spy gets into Estate View, they're not going to get any of your client data because we don't have it. We don't want it. It's in your computer. And it's an extra step that we've taken and that you have to take to save this data so that you'll have it later. And our users are fine with that.
Yes.
Okay.
All right, so now I'm going to walk you through very briefly the inputs that we have in the instant plan. Now, right now, every field you see is highlighted in this orange color, and that means that it does something in one of our other tools in Estate View. If I toggle between by going to settings, instead of the calculator only inputs, I go to the detailed form, which is our most comprehensive form. It has every single piece of information you'd ever want to know about a client. And I don't think there's ever been an attorney who's had all of this information about a client. But it is very comprehensive, but you'll notice that there are all kinds of fields now that are highlighted in the orange color. As an example, the client social security number. There's nothing in our tools that uses your client social security number. Now, you might want to know it, but we don't need to know it for Estate View purposes, so it's not highlighted in yellow. But and you'll also notice on the left-hand side, any tab here that has the orange ribbon has fields that do something in one of our other tools. These tabs are great. You need to know about your client's other advisors, and if you're the attorney, who they're choosing to be their power of attorney. But we don't have a tool, a calculator, that uses that information, so there's no orange ribbon. So I'm going to toggle back to see the calculator only inputs. We ask very basic information about the spouse, just their name, gender, age, whether they smoke for life expectancy purposes, any gifting they've done. I kind of entered sample client information here on a hypothetical client who had already used some of their exemption. The husband's 85 years old. They're married. The wife is female. She's 80 years old. She's also used $5.8 million of her exemption. I didn't enter children information, and for most of our calculators, you don't have to, but you could go and add children, grandchildren, and great-grandchildren. If you do enter more of the information in, there's some nice outputs you can get, including a really nice client chart that does include a family tree. But again, if you don't enter the information, you can still run the calculators. This key financial data tab is really the heart and soul of the numbers for our calculations. So we ask first for a net annual and saving or spending number. If this is a positive number, the clients have net annual savings. If it's negative, they have net annual spending. So this client, they're spending a net of $275,000 a year. I'm going to have that go on forever. So I usually just put at age 200, that will change so that it never changes during their lifetime. But maybe the client is before retirement age, and there is going to be a difference at some point in the future. So it doesn't quite work for an 85-year-old client, but maybe the client's 45, and you want to say when the client's 65, there will be some change in that number. You can do that. You can also have an additional change, so 2 points in time where there's a change. There's the same inputs for the spouse, but these only apply after the death of the first spouse. You can add an existing trust they have, holding companies they have. You don't have to. The inputs that are important are the value of any really personal use real property. So we have their primary residence. It's about worth $500,000. Growth rate on that is 4%. You can adjust that. And then if the client has vacation homes, other personal use real property, you can click to add those additional homes.
Okay, so Peter, let's go to results so we can just show where the
Okay. Yep. So now I'm going to go to results.
Click results.
And yep. So this page kind of gives an overview of, I guess this is life, looks like life insurance. Let's look at the AI results. There is an AI consultant. And Mason, if there's something I'm missing with AI, let me know. I know there is the AI consultant. And again, Mason, correct me if I'm wrong. I think this has access to the inputs that you entered. And you can ask questions to it about those inputs. Am I right about that, Mason?
So you could say, write a letter explaining the information we have received so that the insurance agent can make recommendations for life insurance and liability and casualty insurance.
All right.
So now it's going through their financial information, their child information, their asset information from that intake form and coming up with this. So this is a solid AI component. There's a nice letter to the clients, to the advisors, telling what we know. So while our intake program is also hardwired to give a lot of information, AI is going to replace a lot of that for those of our clients who are willing to use AI. Now, I'll mention that we have some substantial multiple user clients who don't want the AI because of security issues, because they can't get their IT people comfortable with it. And it works fine. But it really makes it more satisfying and more fun for me as an estate planner to be able to instantly write a letter to the insurance agent and say, here's an AI letter, I haven't reviewed it, or here's an AI letter, I've taken a cursory look. Let's get their insurance in place. And it's going to keep everybody on the ball. So should we show them now how you go to save to calculators and then run another calculator?
Sure. So from the results here, I can click Save to Calculators. You have the option to append to existing. What that would do, we just looked at the GRAT calculator. It would create an additional GRAT with these inputs. Or you can just click Overwrite. It'll overwrite what's in all your other tools and with this client's information. And I'll do that in this instance. All right, then I'm going to go home unless there's something else somebody wants to say about the instant plan.
Mason, you were saying something about the life expectancy? No? Okay.
We had a question about how the life expectancy is calculated. in
Okay.
GRAT and in Instant Plan.
Sometimes we are using the Table 2010 unisex rates used by the IRS, which includes smokers and non-smokers. We have to use that in the calculators when life expectancy is part of the formula. Other times, we're using the spreadsheet that we derive from the American Society of Actuaries website, where we put in data for people every 3 years, smoker, non-smoker, male, female, and then we got those results, and then we put them in a spreadsheet that extrapolates. So that's where we're getting our data. And our life expectancy calculator is going to be updated soon so that you get both the standard tables, depending upon the year involved from the IRS, or our estimate of life expectancy. Thanks for that question.
All right, so I've gone over to the CRAT calculator, Charitable Remainder Annuity Trust. We could ask AI what that is, but I'll give you a brief explanation. This is a trust funded by a grantor. So in this case, we're looking at a gift of $6 million. There are non-charitable beneficiaries who receive annuity payments, either for life or for a term. And the remainder goes to charity. There is, if it's given during life, an income tax charitable deduction for the actuarial value of that remainder interest that's passing to charity. And you could, as I said, you could open up the AI tool and ask it for an explanation. It would do a much better job than I just did. So I pulled in the information from the client, the hypothetical client we were just looking at. And again, I do it that way by saving the calculators. I could have also gone to clients, selected the client, and clicked open client, and it would transfer that client's information over. So let's say that this client is expecting to have, maybe they have traditional IRAs that they might want to convert to a Roth IRA, and that would generate several $100,000 in taxable income to them. So what if we wanted to illustrate to the client funding this a CRAT to get a charitable deduction to offset that income? So I'm going to click to see results here. Again, we're in the standard inputs. So it automatically pulls in the 75/20 rate, or, well, that's not right. It's a 10%, so I'm going to fix that. And it tells us the 75/20 rate for the current month and the previous 2 months. So I'll enter 4.8% there.
And in yellow, it tells you which one to use.
That's right. And we're gonna show for life for these clients. The clients are 85 and 80, just like we entered in the instant plan. And so we'll do on the joint and survivor lifetimes, and we'll start with $6 million. Now, I'm going to go into the AI, and you can. Well, before I do that, I'll say the charitable remainder is $2.1 million here that you can see in the results.
So let me just stop. And this comes from a client meeting that I had last Wednesday. The financial planner is very astute, and he knows the people, he knows what they like, and he also knows the psychology. So he said, if you'll convert your IRAs to Roth IRAs, you'll have a lot less estate tax. You'll pay the income tax now, and you'll have all the advantage of Roth IRAs for what's in those Roth IRAs. And then the people, of course, said, wait a minute, we would have to pay income tax if we do this? And he said, no, not necessarily. You plan to leave a lot to charity when you die. We can go ahead and have that charitable contribution made now while you're alive to offset the income tax, and the charities and your children will inherit more. And the people, of course, said, our reptile brains do not enable us to give money to charity right now. We want this to happen when we die. And then he said, well, what if we give a tree to a special trust and you get all the fruit from the tree for the rest of your life? And when you die, the charity gets the tree. Now, this may be rental properties or it may be stock and bond portfolio. You put it in, you get to live on it. If you happen to live until age 135, you get all the income for until age 135. And if you happen to die early, a little bit more goes to charity. And the people said, yes, show us the numbers. So he said to me, Alan, show us the numbers. So I said to Peter, Peter, show us the numbers and I'll sign the letter. So that's where we are.
Now that we're up to speed, I'm going to show how the AI assistant can help us with that. So I have the inputs entered, and I'm just describing the situation. Clients are converting a traditional IRA to Roth IRA, resulting in about $300,000 income. How can we structure a GRAT to result in either a $3 million deduction or a $2 million deduction?
And you meant CRAT. You meant CRAT, C-R-A-T.
Oh yeah, I meant CRAT, but hopefully it'll realize. Let's see how smart it is. Nope, a GRAT cannot generate a charitable deduction. Well, thank you. So I think you're thinking about a CRAT, and you're right. We were working with earlier.
You can
And
say,
so it, go ahead.
no, you go ahead.
Okay, so it makes a little chart, and by adjusting the payout rate, we can see what the charitable remainder will be. So the first thing it says, if you want a 3 million target deduction, you need an 8.28 payout rate, which we can't do. But you can get close to it, and it's 2.1 million charitable deduction. To get a 2 million, we need 11.04 payout rate, which we also can't do. Let me see. It might not be looking at these inputs here. I'm going to re-say this with the right.
So you're going to copy and paste that and change GRAT to CRAT?
Yes.
And why wouldn't you be able to? Oh, you can't do that with a GRAT. Yeah. So a charitable remainder annuity trust is a special trust where you put assets in, you retain the fruit, you retain an annual payment back out each year, and therefore, and the rest goes to charity when you die, but you get the deduction now for the expected value of what's going to charity. And Peter recently did a really nice study for another client who wanted to use a charitable lead annuity trust on death. And he showed them that using a charitable remainder trust on death can have a generally equivalent result. You put more into it, but then the kids get paid over the first 20 years instead of having to wait 20 years and letting the charity get paid first. So running those numbers was useful.
Well, while it's thinking, I'll say how we did this before AI is you could look here at what the value of the charitable remainder is and adjust the payout rate here to try to back into whatever number you wanted. Here now it's giving us 3 GRAT scenarios. One has the minimum, which is the 5% payout rate. That'll generate 300,000 of annual annuity income. It's a $3.6 million charitable deduction and tax savings if they're in the 37% bracket. Second scenario, to generate a $3 million deduction, so 6.29. And you can see it's right on there, $3,123. Gives you the exact number, and it says, what if you did the max amount allowed? And you can see that's that $2.1 million deduction.
Right, because the charitable interest has to be worth at least 10% at the time you start. So with people that age, that's the highest percentage annual rate you can give them, 8 point something without. Now, another alternative, Peter, is what if it's just based on the younger spouse's life. You want to ask it how it can do
Yep.
it with just the
Yep.
younger spouse's life? Or maybe the younger spouse and a child. That might allow them to make it work. And you could
All right,
also
we'll start with what if it was on the younger spouse's life? And
Yep.
while it's thinking, I'll say over here, you can change between life or term and the number of lives. And we could make this 80 if we were doing this manually.
Yep.
Alan, you have good instincts, according to our AI overlords. So it says a single life on the younger spouse eliminates the second measuring life. We know that. Well, we could apply this to the crat we're looking at, or apply it to a new crat.
Yep.
And I think we have to, right now, we have to manually change that to 1 life, and we can see the results here. And again, now that I've changed that, now that I've changed the inputs, to single life, old grantor what? And it's thinking here. And while it's thinking, we can, do the same thing and back into the numbers we want to illustrate. If we're doing this the old-fashioned way, but it's thought about it, and it shows you this nice chart, generating 4 inputs at the bottom. This nice chart that shows the payout rate to generate different charitable deductions with this single life at age 80.
Are you able to?
Question.
Are you able to? Can you expand the chart?
Yep.
Can you make it fill the whole screen? There you go.
And then Alan's other question was, what if I'm learning, I think I have to manually switch it to 1 or 2 lives. Maybe the kids are
40. Maybe they have
40. Yeah. We'll go back to the AI. I've entered inputs to show 2 lives with the 80-year-old wife and 40-year-old child. Update your chart. And it's thinking there, and it will generate the same sort of chart for that scenario.
While this is loading, Peter, have you ever asked the AI to make multiple instances? So when it showed the 3 different options above in a previous search, could it then create those 3 instances within the estate view calculator at 1 click?
I have only seen it do 1 additional one, but I'm sure we're getting there if it doesn't already do it. I'll ask it to do it now. Go ahead.
The reason I was asking is to put it on the list if it's not.
Okay, add it to the list.
Yeah.
My suspicion is it can only do 1.
I think it can. That's been my experience, but I may just not have asked the right question.
All right. So time to go to something else?
Sure.
Okay. Look, you want to make me the presenter?
Yep. You should be able to share your screen now.
Yep.
Okay. Coming up. So our 1 hour is over. So thanks everyone for attending, and you're of course welcome to stay. I'm going to, you can see my screen now.
Yep.
So while Peter was doing that, I went to the Nest and I ran a situation relating to people having a scenario and when can they retire. And
Alan,
yes,
do you mind zooming in a little bit? Just because your screen is very large.
oh, zooming out or zooming
Just
in?
in a little bit.
Is that better?
A
That's
little,
out.
the other way, sorry.
That's better.
A little more.
That's good. I think.
Okay, but now you can't see all the columns.
Right, but it's hard to read what anything says.
I think
Okay.
it's good there.
All right, let's go. Let's go and see what it does for rolling grats now. So a rolling grat is a 2-year grat where you put in assets and then the assets come right back out, but they go into another grat and then another grat and then another grat. And with our Pro Plus, we can choose the rate of return based upon, for example, the 75/20 rates for the last 21 years because they change. And then we can click to input growth rates, and this shows you the growth rates of the S&P 500 for 21 years from 2004 through 2025. And then I can say, okay, if I put $1 million in here and I take only a 2% discount for lack of control, lack of marketability, and I run these grats for this period of time, what is the outcome? And it shows me what each of these 15 grats, if I do this over 30 years, would end up with and what my end result in grats would be. So what I want to know is, can you rerun these numbers based upon a good explanation for someone who would do this with both foreign and domestic stocks and discuss whether they should have separate grats for each type of investment and discuss the illustration itself. And then I'm not going to fix the spelling because that's its job. So this is the first time I've used the AI with the rolling grat, and it'll be interesting to see what it comes up with. And Peter, Mason, one question is, because you helped us structure the rolling grat, and my question for you is, can we use the AI to give us the array of rates of return based upon the asset class that it would go to the internet and say, well, with this particular portfolio, if I put the client's portfolio in, it would go into the internet and it would find suggested historical rates of return, and then maybe allow the Monte Carlo calculator to work with it. So that's what I'm thinking about.
That's a good question. I'm not sure if it's able to do that right now. It would depend, I think, how Kevin set it up. I haven't seen the Rolling Grat AI assistant yet either, so I'm not sure. But you could try and see what happens.
Right, right.
I have it on the list. We'll make sure.
So it says you have years with massive gains, like 23.45% in year 6, 29.6 in year 10. You also have steep corrections because you're using a 2-year grat. The massive drop is contained, so it explains it. pretty well. Then it says, to accurately rerun the numbers on the strategy, you may want to evaluate each asset class as its own track. I'm proposing to adjust the initial value down to 500. This allows you to see the wealth transfer mechanics for just half of the portfolio, and then you could run the other half. So that's pretty interesting. I'm going to look at another one here. I'm interested in the holding in the valuation discount active business. So this calculator, name of the company, Sample LLC, it's making 200,000 a year of EBITDA income, and I think I would value it at 7 times income. Value of assets above and beyond what you would normally need for this business, 500,000. The business owes 300,000 in debts. In debt, we're going to transfer 40% of it. It is voting stock. We're going to assume a lack of control discount of 19%, lack of marketability discount 22%, tax affecting discount, the discount that an investor would pay because they have to pay income tax on the income, 4%, and a key discount for dependents is I don't need. Click for results. So now it's telling me that this 40% is worth let me see, 388,000. So it thinks that 7 times earnings of 200,000, the entity's worth $1.4 million. Plus you got an extra 500,000, so that gives you a value of $1.9 million. But it owes 300, that gives you $1.6 million. Okay, so my question is, if I give you 3 years of income tax returns and financial statements, can you evaluate whether the assumptions are correct based upon accepted principles, and what tax court cases might be used to help test our assumptions and outputs? What all should I give you? Because my thinking is that with this calculator, I'll be able to give 3 years tax returns and financial statements, and it will go through and tell me what my assumptions will be, and then therefore change this and give me analogy to case law, which will be a first draft valuation report. You hand that to a valuation.
Cool.
Yeah, yeah. And it's going to tell me now what to do. So it's not only, hey, AI, do this for me, but hey, AI, tell me how you can do this for me. So it says, as an embedded calculator assistant, I cannot directly ingest, read, or analyze raw tax returns. So Mason, it needs to learn how to analyze tax returns and financial statements. Then going concern, lack of marketability discount. It's explaining everything.
I'm assuming the issue there is just that you can't upload a file. I mean, it's certainly able to analyze them if you
Yeah.
give it a file.
What court cases give us indicators of what the multiples and discounts should be? This is a manufacturer. So you would think there's probably tax court cases and valuation cases and even divorce cases that would apply for this. So I guess, let me see. Yeah, it's not giving me court cases. So we have to make sure that this has access to the same court cases that our AI platform has. And it's not telling me it doesn't have court cases either. Summary of impact, courts, it is talking about what the courts do, but it's not mentioning any specific cases. All right, so let's play with another calculator, and that would be required minimum distribution calculator. So let's see where that is. RMD. There it is. Okay. So with the RMD calculator, I'll go to Pro Plus here. So I've got a 69-year-old, table 210 life expectancy, 16 years. We'll kill them off at age 83. We'll illustrate, 83. So we're illustrating 15 years. Assume an 8% rate of growth. They're in the 37% income tax bracket. The IRA is worth $4 million. And we would want to go ahead and let them defer the first year RMD. Maximum annual charitable donation would be $108,000 a year. Right now, that's what that $100,000 a year deduction you can get if you just move assets directly from your IRA to a charity up to $800,000 a year. Once you're 70 and a half, it doesn't count as a transfer. And assume inflation at 3.9%, so that $108,000 a year is going to go up by 3.9% a year, and let those transfers exceed the required minimum distributions, and start charity at age 70. So then I have the results here. I have the instant results, and I see that this $4 million does nothing but grow, even though the required minimum distributions go up every year. So you see the required minimum distribution in 2031 is going to be $411,000. Tax on that $152,000. Net after taxes $259,000, and $130,000 can go to the charity, and the tax savings from the charity part is $48,000. But this person needs to wait until they are 70 and a half before the charity can get started, and then that's going to all work fine for them. So I can show this to the client, and they may or may not understand it. By the way, I can click Fit All so that all this. So now I'll go here to AI, and I'll say, explain this chart to the client and why instead of donating $200,000 to their favorite charity this year, they should wait until 70 and a half and do it from the IRA. They can pledge now and even donate $6,000 a year until 70 and a half to do this most efficiently. They do not have appreciated assets outside of the IRA to donate. Okay. Because everybody says, donate now, get the tax deduction now, get the tax deduction now. But if you're going to get a better economic result from transferring it from the IRA to charity, and you're 69 years old, you wait until you're 70 and a half. So now it's running these numbers. Why wait until 70 and a half? Pledge now. So now it's written the letter. So I had the idea. I talked to the client about it in the conference room. I haven't really done this yet because it was a conversation that I had this week with a client. But now I've got a letter to send them saying, explaining the required minimum distributions and how this can work. So by waiting a year and a half, you convert a highly taxable 200,000 withdrawal into a 100% tax-free wealth transfer. So it makes sense. Okay, now what assumptions should I change to show this client how RMDs work if I want to show 2 or 3 alternatives? And that's where, as Peter has said, now what else can I show them? And I'm interested in how can I learn more about this? Now, Mason, I'm noting that while it's doing this, I should be able to type in my next question. Right now, it's locking me out of the question box. But while I'm waiting for that, I should be able to type in the next question. But there it is. Now it's telling me what my 3 alternatives are. So then I can say duplicate RMD1 and apply. So now I assume that it's going to do a second RMD. So now I have RMD number 2, which is what its recommended second alternative is. And then I can ask it to run the explanation letter for that. So that's going to be nice for RMDs.
Alan, can you demonstrate the voice to text functionality?
Sure. Let's assume that this client has a disabled child that will need everything in this IRA when the client dies, period. The child is age 41, period. The child is age 41, period. Can you run the numbers for me on how this would look? Okay. Because we've been working on a new calculator for how to calculate what the output would be for disabled individuals, and that calculator's not done yet. But now it's going to tell me. It's telling me what inputs to change. Oh, actually, it's still working on it. And then I guess another question, Peter, is can you simply ask it, can you create a spreadsheet for this? Because if the AI creates a spreadsheet using factors and information other than what we have hard programmed into a state view, then the user can check the spreadsheet and at least make sure.
Yeah, that's true.
So another button might be prove it in a spreadsheet.
Yeah, that would be very cool. I think now it can just do a table, but a spreadsheet would be great.
Yeah. Now I accidentally just got it started, but to see how it does, understanding the disabled child and whether it tells me what the definition of a disabled child needs to be in order to work. Again, very educational. And Mason, we wrote a book with Brandon Ketron and Ed Morrow and Christy Denicolo on IRA distributions and how they work. So we should make sure that that is in the library for these questions, because if they draw off that book, then I'm confident that they're going to get the right answer. Natalie Choate has a fantastic book, and we've tried to make sure that our book has the same results as her book, which was exhausting, but she's the grand master. So, yep, now tells me the numbers and what they'll be. So that's very neat. tells how much will go into the special needs trust and how it will work. So yeah, a definite enhancement there.
We got a question in the chat. Can the RMD calculator address a scenario where the client will be a beneficiary of a parent's traditional IRA and calculate potential RMD of inherited IRA?
Can you read that again?
Yep. Can the RMD calculator address a scenario where the client will be a beneficiary of a parent's traditional IRA and calculate potential RMD of the inherited IRA?
I'm sure it can. We have a new calculator coming to do that, so it'll be hardwired, but I'm sure it'll be able to do that. So now I'm in the Monte Carlo calculator. Now we do not have a sophisticated Monte Carlo calculator, but we've got one that I like because it's understandable to the client. So you put $1 million into an investment portfolio. It's 40% bonds, it's 60% equities. You're going to invest it for 40 years. And I'd like to see standard deviations, including the best 5% standard deviation and the worst 5% standard deviation. So I can customize that. And now I click on results, and what it shows me across the top, and it assumes the S&P 500 for the equities, and it assumes the historical bond returns for a reasonably allocated bond fund. With the AI, we're going to be able to have a lot more choices as to what these assets are. But here you have a number of years invested, 65. I thought I went with 40, but let's see, we'll go 50. Because you figure it's not only you, but it's also your children that this is helping. So the 50th percentile rate of return is 8.78%. That's what you would normally use. That's the average rate of return. And maybe you would take off 0.5% or 1% or 1.5% for taxes and advisor fees. But there's a 25% chance that your rate of return will be 7.86% or less, and a 10% chance that your rate of return will be 7.06 or more, and a 5% chance that the rate of return will be 6.69 or less. There's a 10% chance your rate of return will be 10.57%. So we go here and we see these different rates based upon the percentile. And my gosh, after 50 years, you may have 67 million, you may have 25 million, or you may have 190 million. So what can AI do to help me better understand this situation and write a letter to the client explaining it? We used S&P 500. What other indexes should our programmers put in? So Peter, if you're going to ask 3 questions, you may as well ask all 3 because you'll see it.
Yeah, that's true.
Come up with the answers one at a time anyway, right? I don't think it's any slower to ask it 3 questions.
No.
The one benefit I would say is if you want a client letter and you want to download it, if you ask that in its own question, I think it'll be easier to download because you won't have to just select that part of the answer.
Yep. Okay. So there it is. You're using standard deviations. By the way, we need a scroll and auto scroll function on this thing. So, dear client, part of your long-term stress test, $1 million portfolio, 50 years, 10,000 independent mathematical models. So we roll the dice 10,000 times based on outcome. By year 50, the portfolio is projected to grow to 67 million. That's pretty good for for a $1 million investment. Annualized rate of return of 8.75. So it explains it pretty nicely. And then expanding your software's indexes. So it actually tells me how to redesign my software. And it gives me the indexes that I can use. So that's pretty nice. And then all I have to do to print that is click on the printer and then choose my color printer, click print, and now that's printed for me. That's nice. Or I download it to my computer, and there it is, and I open it as a Word document. And as Mason said, if you ask to, it would be different. Okay. So, what calculator should we go to next? Peter, do you want
I know
to?
there's Cupert. There's Cupert. There's AI in the Cupert. Is there AI in the installment sale? I haven't checked that one.
Yeah, let's see.
Because that one's a little different than the other calculators.
Okay, so there's
No.
installment sale with income tax analysis. Okay, so he doesn't have the AI
Yeah.
installment sale yet. We'll have to ask him.
Yeah, that one is on his list. He said it's one of the more complex input sets, but he's hoping it will be finished this week.
Now he does have it for the SLAT.
Yeah.
So let's look at this. So the spousal limited access trust large gift, we're going to have no reduction in the exemption. It'll stay at 15 million. And then we could split the gift with the spouse, which you have to be careful and make sure the spouse is unlikely to receive anything. We can put this in Massachusetts, also known as Taxachusetts. Assume that the Massachusetts exemption, which I think is only 2 million or 3 million, is going to go up with the CPI, and age, let the person be 70, life expectancy 15.4 years, have them die at age 85. They're saving $200,000 a year. They have a $25 million present net worth. Investments grow at 7.5% a year. Tax rate and cost of investments, let's say 1.75%. And we're going to make a gift of 5 million and see what that does. So I click to see results. And the estate tax savings on that is 7.284 million. Now it's not showing the New York or the Massachusetts, so I'm not sure whether he's got the state working or not. So we'll have to check on that. Yep, state tax savings 4.9 if you didn't have Massachusetts, but with Massachusetts, state tax savings 7.2. That should really be combined in the.
Is it in the Pro or Pro Plus?
Yeah. Okay. So now we
I
go
was
to.
thinking it might just be a different column that you can't see in the.
Right. Right. So we'll go to Pro Plus.
Yeah, because there's state estate tax.
Yeah. So he really should put that separately. So he needs to add that. But that may be a good question. And then here is the illustration of the estate tax savings from the burn. And now I think what I'd like to do is just say, please give me a comprehensive letter to a client who is a sophisticated engineer explaining in great detail what this is and how it works and what the income tax and estate tax implications are. Suggest other settings for a second example to help her understand how all of this works. Okay. I would think that that might be an automatic question. I don't know if we should have a button for click here for comprehensive explanation, click here for simpler explanation, or just click here for explanation and then a drop down that says comprehensive. I'm very interested in what anybody might think about that. Comprehensive analytic, part of your, based on our baselines. Wow, this does a nice job. And there, then it says increase the gift to 10 million. Okay, so what do I do? Just say, please start gift number 2 with with a 10 million gift? Or I mean, I can go here and just click duplicate and just do it myself and go to 10 million. But let's go to 20 million. So at 20 million, do we start running out of assets? Oops, we're negative 44 million at age 100. So put explain the risk of running out of assets in the second scenario and specify the numbers and the year that it happens, because you don't want to do too much. So I click there, and while it's writing, we could just look at this.
Right there at the bottom of the original response, it had a apply. You fixed it manually, but it was there for you.
Okay, explain the risk of running out. Yeah. Oh, okay. But not a good day when you gift too much and your client runs out of assets. And this is one of the things that Jerry Hesh, of course, you could always toggle off grant or trust status before that happens. Did it already write that? Nope. Explain the risk. Okay, apply. Year to toggle off grant or trust status 12. Okay, so I guess I have to click there, or it's not doing anything. You think it's stalled, Mason?
Can you scroll up a little bit just so I can see the last? It's very strange. No, scroll back down to the question now. I'm wondering if because you clicked
I might have messed it up.
apply while it was running, if that messed it up. If that's what it is, I'll have to go and fix that.
So
Yeah.
I would just copy the question and paste it in again from the chat. Oh, let me- Yeah.
And copy, paste.
Now we'll let it run.
Does anyone have questions about physics? Mason's, was your major physics? Do you have a co-major in physics?
Yes, physics, just physics.
Wow.
Nice.
Do you have a favorite law, or I guess element on the periodic table?
Favorite element?
That's chemistry, right?
Well, I guess yeah, but
I'm gonna keep it simple. I'm going hydrogen. I love hydrogen. What can I say?
Well, hydrogen oxide, isn't that what they give you at the dentist office? So is that why it's your favorite?
It's element number 1 because it's number 1.
Okay, well, this thing seems to have stumped the panel. It seems a little stuck there, so we'll have to
oh, interesting.
go back and see how that happened. All right, how about life expectancy? I wonder how it can do there. So here I've got a married couple, both age 70, and we don't have standard life expectancy here. We need to add that. But under the 2010 table, when I click on results, each of them has a 15.4 year life expectancy, but jointly they have a 19.8% life expectancy there's a 50% chance that one of them will be alive in 19.8 years. So I wonder if I can say, let's say, explain this life expectancy analysis and what the survival probabilities mean. Compare my life expectancy scenarios and highlight the differences. How would changing the mortality tables affect results? So I'll click explain this life expectancy analysis and what the survival probabilities mean. See, this I think would be fun for clients to use. I mean, maybe I'm
Yeah.
I think it's fun, but what we're going to need here, I think, is a questionnaire that the client can fill out. What's your life expectancy? Well, how much do you smoke? How much do you drink? How much do you weigh? How much do you exercise? Or give us as much information as you can in this, and maybe there's a reputable website that can help people with their life expectancy, and maybe we can get people to stop smoking. I'm not going to ask them to stop drinking, though. It's a quality of life issue. And then the other question is, once we run one of these, are we going to ask Claude to check Gemini, etc.? Okay. Actual life expectancy, probability of both surviving. This is good. Trace this. The probability of at least one spouse being alive remains above 50% all the way to age 90, finally dropping to 45.11% at age 91. This extended 19.8 year horizon is the critical timeline you should use when structuring strategies that depend on this last to die. That's, pretty insightful that it knows that. Like I said, this is one calculator will be definitely improving. How about the letter writer? Does he have the AI in the letter writer? He does not. So this letter writer, Mason, is a letter that automatically can be drafted based upon, do you want to talk to them about the attorney-client privilege? And if so, do you want to talk to them about the CPA privilege? Do you want to show them the exceptions to the attorney-client privilege? If you have a conflict of interest situation, do you want to suggest a marital inheritance agreement, separate legal counsel for each spouse? You check these boxes. It forces the planner to think through these things. So once this letter gets spit out and AI looks at the letter and looks at the client's data, AI should be able to improve the letter and give you a red line. So I think that's what's going to come next for this feature. I don't know how many people are using it, but I hope some people are using it because it took a long time to put it together. Peter, you want to choose one more?
How about, well, we never did get to the Cupert. We could do private annuity.
Yeah, we haven't seen private annuity, right? So
Nope.
with a private annuity, we'll assume that the exemption stays the same. And where it says exemption here, I think it should say no reduction in estate tax exemption. So the people using this are clear on what we mean.
Mm-hmm.
Okay. So then, and it really should be yes or no, because if you click this box, you can't click the above box. So I don't know if that should be a toggle or a yes, no. So and if you say if you say no reduction in exemption, then this thing shouldn't even be here. You shouldn't have the 50% reduction at year 2030 if you checked no reduction in exemption. So that can be cleaned up. But anyway, let's say that you have two people, age 69. You could put in their date of birth. You don't have to. 169, 165, and they're going to start a level payment term. They're going to put 50 million in there, and it's going to pay them 3,782,000 a year for life. So that is not a gift. And now Peter, if I put in $50 million into this trust to get them under the estate tax exemption, the trust has to be very well funded because of the probability of exhaustion test, and it pays them back $3,782,000 a year, which they use for spending and charity. Then when they die, it's not subject to estate tax in their estate. Now, for these two people at these ages, how much does the trust have to be worth before the transaction? $68,790,000 because of the probability of exhaustion test. So, and you can use the standard IRS tables as long as there's better than a 50% chance that no one physical condition will cause the client to die within a year. And if they die, if they live a year and a half, then it's presumed, I don't think it's irrebuttable, but it's presumed that they did not have a condition. So when you have a client that comes in and says, I've got bad news, I only have 4 years to live, maybe 5, you say, no, that's really good news for your family. They're not going to miss you that much anyway. And we could take your 50 million worth of assets and put it in a trust that we already formed for you that has $69 million in it. And then you'll never have to pay estate tax. And that makes them very, very happy that they have that physical condition, or at least it makes them happier. So now I can go to Pro and I can make it a little fancier. In the Kite case, she didn't get a single payment back for I think the first 4 years. So I can say, well, how about if I don't get a payment back for the first 4 years? And then the client may, I'm sorry, let me go back. So the first alternative is what I've showed. Then the second alternative is I'm going to defer it for 4 years. And then the third alternative is, oh, and let's have state income. Let's have state tax too. That'll be fun. So now we'll click on estate tax. We'll put them in Oregon. And then, they'll move to Oregon so that they can get the end of life suicide pill if they want it. All right. So then number 2, same thing, but we'll move them to Florida to live with their children. Oh, yeah. So Florida doesn't have an estate tax, so no estate tax. And then number 3, we'll keep them in Florida, and we'll use a valuation discount. So I'll have to go to Pro Plus, number 3, valuation discount. We'll put 50 million in an LLC, and we'll have them take a 10% discount, a very conservative 10% discount, and that'll get their payments lower. So now those are the 3 alternatives. So I'll go to the AI, and it says explain these private annuity results and the exhaustion test for my client. Okay, let's see how it does. What I'm seeing, Peter, so far is no hallucinations. Have you found any hallucinations or any inaccuracy whatsoever when you keep it on this small playing field?
No, not with this assistant. And I think it benefits from it's running the calculations through the estate view calculator. So it's keeping it on the straight and narrow.
Yeah. Private annuity, asset value transferring 50 million, 10% discount, private annuity, deferral period, exhaustion test. It explains the exhaustion test. Now I want to know, what does Larry Katzenstein say about the exhaustion test? Is it enforceable? And can guarantees be used instead of trust assets to satisfy it. And the question here, Mason, is whether it can search the internet and take the article. It's going to find the articles by Larry Katzenstein after it corrects the spelling of his name, and then apply that to this situation. If it can't, then we need to open that up to allow that to happen. Did it?
Wow.
Leading authorities, including Larry, by the way, who does tiger tables, consistently emphasize that the IRS exhaustion test is enforceable. I thought he wrote that it wasn't necessarily enforceable. So we'll have to double check that, because that could be a hallucination. And then using guarantees, because making a seed capital gift to the trust would consume a massive amount of using a guarantee is a standard industry workaround. IRS is generally accepted. Okay. It needs to always give me citations for.
Yeah, it does. This tool doesn't seem to like to give citations.
Okay, so we got to go ahead and make sure it always gives citations.
Kevin may have this pointed just at the knowledge base within the estate view calculators, but I'll definitely confirm with him on Tuesday or even before, likely today via email.
Yeah. Okay, there's the regulation.
Yes, giving primary sources.
Yeah. Yeah. Now when okay. Now I'll click on Claude and I'll say, is the above right? When you have one AI check on another, which is the nastiest? Some of them are really critical, like terrible mistake. You called it a Q-tip trust. It's a Q-tip marital deduction trust. What does it say? I must be fully transparent on this point. I cannot guarantee, we need the anti-scroll here. I cannot guarantee the accuracy of these citations. As an AI calculator assistant, I do not have access to a verified database such as Westlaw or NexusLexis. While the general legal principles I described are well established, that's pretty honest. You can rely on that. But our AI section says that they can rely on anything written by a Lissy author, anything in a Big Four CPA website, anything in Holland. And we have a whole array of you can use this, don't use that lists that we should go ahead and import to here. So
I think it's just not pulling it here, but it uses it in the AI page.
Here's another one. Can I insert?
Yeah, it does seem to be different.
A private annuity agreement and trust and have you confirm what needs to be changed to have annuity number 2 used in it. That's going to be pretty cool when you actually put your private annuity agreement into this and it conforms it to that. So that's another question we'll have.
Do you know, Mason, if he clicks the button to copy this chat, will it only do the most recent response, or if he uses the one at the top, can he copy the entire thing?
The one at the top should be the entire discussion.
Okay, because I'm wondering, we may be able to copy the entire discussion and then go to the AI search and put it in there if we're interested.
We
Your
should
attorney must be aware.
probably even have the ability to automatically add that as a button. In Instant Plan, you can save the AI the AI consultant discussion into an AI search tab, so we can add that here.
So I said, can you draft the guarantee agreement needed to have this qualify? And eventually it will be able to. Cannot draft legal documents. I'm a calculator, stupid. I'm a calculator assistant, not a document drafting tool, and generating legal agreements falls outside of my capabilities and would be inappropriate given the stakes involved. Guarantee agreement of this magnitude requires qualified legal counsel with specific expertise in private annuity structuring. Oh, I love that. But here's what it can help with. That's pretty cool. It knows it's.
I think Shane's right. You can copy and paste that into our regular AI, and Mason's, they were saying.
Right.
We'll get a button to do it in one click.
So would it be export calculator data into our other AI?
It'd probably say something like, continue this search in the full AI suite. And when you click it, it redirects to the Estate View AI page with all of the chat history loaded in, and then you get to work.
All right, so I think we can close this webinar with the most important revelation of AI calculators, and that is it will write a poem.
Yes.
The grantor,
Oh, wow.
the grantor stood with 50 million strong and wondered where these assets should belong. I'll sell them to a trust, the grantor said, for annuity payments until I'm dead. The 75/20 rate was 4.8, a monthly figure published by the state. See, that is one hallucination. Two measuring lives, age 69 and 65, would keep this annuity obligation alive. The actuary spoke with the numbers clear. Your annuity factor 10.1, my dear. Divide the value of this factor true, 4.96367 comes to you. But wait, the grantor said, I have a plan, a 4-year deferral before payments began. The trust will grow untouched, compounding free, from 50 million toward prosperity. And grow it did through years 1, 2, 3, and 4. Not a single payment walked out the door. Oh my gosh.
That's funny.
This is fantastic. Yeah. Oh, and by the way, I want everyone to know this poem is for education and illustration purposes, not constitutional tax or professional valuation advice. Please do not file this with the IRS. Current laws and tax rules are based on subject.
Funny.
I don't know how the IRS would react to getting that poem. That'd be interesting.
All right. Well, anything else you guys want to do or say? We've got 29 people that are still holding on.
Wow.
I'm very, very.
Good job, everyone.
Now, 18 of them are catatonic. So, but some of them are still there. Is there, Peter, do you want to share a screen and show anything else, or you think we'll call it a day?
Cupert was the last one, but I feel like we've definitely have the idea across of what this can do, and I'm very excited about it. I might have to start working at McDonald's, but it'll be easy to do calculations in between shifts.
Peter, show us the dog. Is that a retriever?
This is my dog, Biscuit. I thought at the end he'd say hi.
There we go.
Hey, Biscuit.
And the most important question in the
Biscuit.
chat from the whole session: does
Biscuit,
the dog
come here.
do Estate View too?
And is he a Labrapoodle?
He's a Cavapoo.
Wow. How old is he?
He was born in June, so he's a little baby.
Oh, that's cool. All right.
And
You have a pet trust?
I need a pet trust. That's right.
And Seal wants to know: does the dog do Estate View too?
He does. He does. He does. He does a lot of Estate View, and it's much easier now with the AI.
Okay, so those of us who have attended, or those of you who have attended, thank you for putting up with us for 1 hour and 55 minutes. Shane, thank you for herding all the cats in the Estate View world. And there's plenty of them going on. Mason, thanks for programming and for being in this program. And Peter, thank you for tirelessly proceeding using Estate View so many times. It's just a great pleasure. So if anyone has any questions, comments, or suggestions, you can, of course, contact us. If you would like to co-present with us, if you have a favorite calculator and something that you've done on it, you can certainly, share with us. Just don't give us your client information, but you could use fake information. and then we can get together. Hope everybody has a fantastic rest of your day, and thanks again. Bye.
Thanks, everybody.
Take care.